Hello ladies, today's video is about how you can come up with a portfolio of crypto assets, the likes of what financial analysts would do and the likes of what knowledgeable people in finance would do with their own portfolios. All right, so I've done a lot of research, I've done the homework for you. So all you got to do is stick through this video and follow everything that's discussed in this video, and you should have yourself a pretty good portfolio, a strong one that will not let you down in a couple of years. Okay, now the first question on everybody's mind is probably how much of an investment do I have to make to actually have a portfolio? Well, the simple answer to that is how much ever you can afford to invest. A lot of people say, please be okay with an amount that you can lose, but I don't like that philosophy because obviously, who likes losing money, right? But as a beginner in cryptocurrency, and this is the way I did it, I first tested the waters. I first tested the waters with 5,000. Now, 5,000 is an amount that for me in my life, it's not a big amount. I would be a little sad if I lost it, but it's not earth-shattering. Like, I wouldn't cry for months if I lost 5 grand. So I first started with 5,000. I waited for a couple of months and I made the mistake of investing my money the first time in a bull market. Basically, a bull market is when all the prices are high because people are buying and there is greed in the market. So everything is in green and everything is just skyrocketing. Currently, today as we speak, we are going through a bear cycle. So like everything is looking bearish in the market. It's a good time to invest. That being said, will prices from today, now suppose some of you all say, I'm going to invest today. Will prices of certain tokens go down from today? Yes, it may, because like I said, the market is bearish. So it's not that you have to put in all your money at one go. There is something called dollar cost averaging, which is very important. I will discuss that in a minute. But coming back to how much money you can actually start off with, if you have 10,000, if you have 15,000, if you have 25,000, that's perfectly fine. You can divide your money in a larger number of projects. If you only have 5,000, then I would say, okay, just divide your money between 3 projects, choose 3 projects that you're interested in and you think will go in the long run, because you have to see some kind of a wedge made in the kind of increase that you will see in your amounts as well. Now, if you divide 5,000 into 500, 500, 500, 500, even if there is a 30% increase or there is a 100% increase, it's not going to be too much to you. Even if you double your money, the double of 500 is only $1,000. To you, $1,000 may not make a big difference. You have to see what's right for you. Okay, now for the sake of this video, I'm just going to take an example of let's say 20,000. Yeah, we'll work with 20,000 and 20,000 as 100% of our investment for now. What is dollar cost averaging? So in its simplest form, I'm going to try and explain this. Let's say you're buying oranges and each orange is a token of Bitcoin. And this is just a hypothetical situation. A token of Bitcoin is not worth rupees 10. So hypothetical situation, Bitcoin is oranges. Let's say you bought your first orange. You bought you entered the market. You don't know whether it's bull. You don't know whether it's bear. You just said, I want to buy, and you bought it at that time. It was rupees 10. Okay. Then what happened from that time onwards? It started peaking. It was bullish. It started going up. Now you were at a point where you're new to the market and you said, oh, so greed kicks in, which it ultimately does for everybody. And you're like, oh, it's going up. Maybe I should buy more. If it keeps going up, I'll be a millionaire. So you decide and go to buy one more orange at the rate of rupees 12. The market is going up, remember, huh? Now, you expect it to keep going up. That's why you bought it for 12 in the first place. Otherwise, why would you buy it for more expensive than 10? But it didn't go up, and it dropped to 9. So you've lost money at this point because it's dropped past the 10 point at which you bought your first orange. So you're losing value on that first orange. You already lost value on that second orange. Now it's dropped to 9. So what do you do about it? Do you sell? No, you don't sell. You do what's called dollar cost averaging. That means you buy more of that asset when it is cheaper price, so that the average amount that you paid for each token is less. So how do you do this? You buy at 9 because 9 is cheaper than 10 or 12. Okay, very good. You're happy with your investment. You kind of little bit dented that the mistake that you did of buying it at 12. So, but after this point, the stock keeps falling and the price comes down to 5. Now you're not sure whether it'll drop anymore. So at 5, you're just like, hey, at one point I paid 12. Now I may as well pay 5. So if I pay 5, and if you imagine instead of buying one orange, you buy two oranges, then even better for you. But for the sake of this example, we'll stick to one orange. So let's say you bought, when the price reached 5 rupees, you bought one more orange. So totally now you bought one orange at the rupees 10, you bought another orange at rupees 12, you bought the third orange at rupees 9, you bought the fourth orange at rupees 5. But the average price that you paid for each orange now, since you have 4 oranges, is rupees 9. So basically, this helps you correct the mistakes of buying in a bull market. This is what is called dollar cost averaging or rupee cost averaging, or whatever you want to call it. I hope it was clear. So now, out of the thousands of tokens, how do you even begin to understand which token to invest in? You can broadly categorize them under the kind of market capital that they have managed to acquire till date. The market capital is nothing but the number of existing tokens minted into the price of each token. So basically, if a token has been minted, that means it's in existence and it's owned by somebody, and somebody has put in that amount of money to own it. So basically, that amount of money, a total global market cap of a coin, is available on sites like CoinGecko, CoinMarketCap, Coinbase, Kraken. There are a lot of places where you can check out what the total market cap of a particular coin is. I will leave certain very common links in the description, so you can go check that out. Going back to big cap projects, more than 10 billion market cap. Medium cap projects, anywhere from 1 billion to 10 billion. Small cap projects will have 100 million to 1 billion. Micro cap projects and less than 50 million. So what difference does it make whether you invest in a big cap project, whether you invest in a medium cap project? What real difference does it make? Why does it even matter? Here's why it matters. The bigger the market capital in a project, the bigger the backing. That means the more number of people consider that project is viable, that project has some use case scenario, and that project has a future. Because if you don't have investors, that means it's equivalent to not having a community that believes in you. Now, the reason a meme coin or a shit coin like Shiba Inu is doing so well without a use case scenario, without actual fundamentals backing it till now, at least. It's kind of getting there over the past 6 months, but not really there. I mean, it's not an Ethereum, it's not a Solana, it's not a Cardano, it's not a Bitcoin, all right? It's not even a, I mean, I don't know what it is. It's a bunch of followers. It's a community. And in cryptocurrency, community matters. You know, these kind of videos where nobody that you know is sitting and willing to help you out, invest your money. That's the kind of community crypto is. There are no more these people who want to hide information from you and don't want to be transparent. No, the crypto market, although there are a lot of scams, but when you find great communities, these communities will stick by that project. And it just shows there are so many people holding Shiba Inu, although there was a huge sell-off, and about Shiba Inu in the past 3 months has lost about 60% of its value. But it's skyrocketed for a reason, and it will go up ahead simply based on community. Coming back to, so what does this mean to you? It basically means for a newbie, if you're starting off, you can safely bank on certain projects because of the amount of money that's already been invested in them. You may not see price rises like 100% increase, because see, remember, these are already big projects. They have already grown from a very nascent stage to now becoming huge. So the amount of percentage increase that you will see in bigger projects that are already grown is not much as compared to if you find a micro cap project, which is highly risky because it's not been tried, it's not been tested, people are not putting in money because of the same thing, right? It's highly risky. But the micro and small cap projects are the ones that can actually make millions because of the kind of climb that they will do in the next coming year or the next coming 2 years. They are currently micro cap, but they could be tomorrow's big cap or tomorrow's medium cap. So you have to consider what your risk tolerance is, since it depends on how many years you've spent in the market and how you understand the market and what risks you're willing to take to make your investment grow. Okay, so moving on a little more to how you can break up your money. So ideally, this is the kind of breakup that you should be looking forward to. That is 50% of your money in big cap projects, the next 30% of your money in mid cap projects, and 20% of it in small cap and micro cap. Now, you have the choice of doing two things with that last 20%. You can either put it all in small cap projects, which is also a safe bet, or you can divide 10% into small cap projects and keep 10% for those projects that you have an emotional connect with. You could see yourself becoming a part of that community. You could see yourself getting involved. You could see yourself taking that project seriously and running with it in the long run because you believe in that project. If you don't have any such sentiments, you can just take a very calculated choice and put the last 20% in small cap projects rather than leaving 10% to some very new project that really doesn't have, all its ducks in a row. Ladies, please don't keep this channel a secret. Please tell all your girlfriends. Everybody deserves financial freedom, especially women in India. So these are some of the big cap projects. The first being Bitcoin, the big daddy himself, the original cryptocurrency token that was made to function as a digital currency. That's basically its use case. Ethereum is a smart contracts platform. Basically, every other app can survive using the smart contracts Ethereum network. So Ethereum forms the basis of a lot of other projects like your NFT marketplaces and a lot of other coins and a lot of other tokens. So basically the ecosystem in itself has value, and Ethereum as a project in what it achieves has value. So Ethereum, a close second behind Bitcoin. BNB, so basically BNB is Binance Exchange's native coin, that is Binance coin. So BNB is good for a lot of transactions. BNB, the project, is growing because of its transaction speeds, because of the amount of interest that people are taking in them. It's easily swappable. Bitcoin, the exchange itself, helps a lot of other tokens launch their ICOs and IDOs. So that's a great project to invest in. Now, that being said, none of any of these videos or none of this entire video is financial advice. This is just me trying to loop in more women into becoming interested in cryptocurrency and kind of giving you a very scratch the surface kind of view towards cryptocurrency. But trust me, anybody who invests should definitely spend some amount of time doing your research, reading white papers, studying the fundamentals of every project. And if you think that the project has a future, then and only then, please go and invest your money. Don't do it because I said so. Don't do it because anybody else said so. The greatest of financial analysts, see, if you take financial analysts from Goldman and Sachs from 2 years ago, from like 2017, they swore that Bitcoin was going to zero. These are trained veterans in the field of finance for over 25 years, 30 years of experience, and a whole bunch of people said Bitcoin would go to zero. Today we're in 2022, and Bitcoin, now people are pushing for it to go to 100K. That may not happen in the next couple of months, but maybe towards the mid of the year. I don't know. But the point is, cryptocurrency market is something that we don't know how big it's going to be. I believe that it's going to be big. I believe that it's going to be the future. But do you believe that? I don't know. I cannot make that decision for you. So the point I'm trying to make is always do your due diligence. Always get your fundamentals right. There is such a thing called fundamental research. One of my next videos is going to be about how to conduct fundamental research, how to conduct technical analysis, the basics, how to conduct fundamental analysis, and how to know whether your project is worth your money. All right, moving on. So here we're looking at some medium cap projects. Obviously, these are not all the medium cap projects. This is just an example, and this is no way me trying to insinuate that you should invest in these projects that I'm telling you about. I'm just giving you an overall view of it. All right. So I'll start with Matic. Now, just fun fact, Matic is an Indian founded cryptocurrency, an Indian founded Polygon Matic. And Matic seeks to improve. So firstly, it's a layer 2 solution, which is it's a relatively newer solution, and it combats some of the challenges that Ethereum is currently going through, like slow transactions and high transaction fees. Number 15 is actually Binance's stablecoin. So it's BUSD, which is basically, it's always going to remain at the dollar value. These cryptocurrencies called stablecoins are meant to be stable all the time because they are pegged and run parallelly to the dollar or to certain other crypto-backed assets. I will not go into that in more detail, but in a nutshell, that's what a stablecoin is. Now, if you invest in a stablecoin, there is no point because your money is just going to stay at that value. It's not going to grow. So then why use stablecoin? Because stablecoins are necessary so that you can dock your finance, so you can dock your investment, and it'll just remain there in crypto form rather than converting it to fiat, which is basically traditional currency. So let's say you're not trading, or let's say it's not in the market, you're not investing in a particular project, and you just want to collect profits. Let's say we're in a bull run, you've seen your investment do well, you want to take it out of that asset, but you don't want to turn it into currency. You just want to hold on to it. That's why stable coins. So you convert whatever asset you sell off into BUSD or Tether, which is USTD, and other such stable coins, so that they will just sit there in that form, and it's a simple conversion. Convert it as in dollars. Okay, if you want more information on stable coins, please leave me a comment. Please let me know what you want me to do more videos about. I definitely want to hear from you, and please be interactive with these videos so I know that you all are out there and that this is helping you. Next on this list is CRO, which is basically Crypto.com. Crypto.com is a payment and cryptocurrency platform that basically empowers users to buy, sell, and pay with crypto. So it's like traditional finance but for crypto. So everything that you're used to, right? The Visa card, the payment services, borrowing, lending solutions, all of that is what Crypto.com aims to achieve as a project. Chainlink, which is basically Link, and Near Token, Atom, all of these are great projects. Please do your research. All you need to do is go to Google and type in the name of the cryptocurrency, and then just type in white paper, and all the documents will turn up, and then you can read all their use case scenarios, and you can find out what their future plans are. You can find out what stage of the project they're going through. If all these projects have Twitter pages and Insta pages, and there are socials, so follow their socials. Join the Discord communities. A Discord community is where a lot of the governors, basically the core team, always gives you commentary on where the project is going, what's up next with the project. You can always find out about airdrops if they're giving you free crypto. We will be doing a video on free crypto airdrops very, very soon, so please stay tuned for that. Now, the thing about small cap and micro cap projects is that there are so many of them. It's really difficult to, put your money on a project and say that this project is going to do well, because at that point you're just hoping, right? So what is a good idea to go by is basically listen to word on the street. Listen to how the socials of that project are doing, because the more the hype, obviously the more number of investors. But that being said, in the long run, whether that project will be successful or not is still left to be determined. But if you can see, I'm just going to scroll through, right? So first off, on the border of, being a medium to small cap is Ravencoin. Ravencoin shows great promise. Please go research the project. If given I currently don't have anything in Ravencoin, but definitely on my watch list. A couple of other projects like Zilliqa, I would totally have my eyes on Zilliqa. I would have my eyes on Anchor, that's 130. But you see, the thing is, there are just so many, right? And as time passes, there's always going to be people that are gonna one up these projects, or these projects themselves are gonna be better. So you just never know. So this way, you when it comes to that last 20% of your portfolio, you definitely keep your head to the ground. You definitely keep your eyes and ears open, and you kind of shuffle that 20% around from project to project, depending on what you feel about that project. Or if you really believe in that project, then you stick your money in it for a long, long time. So if you're interested in investing in small cap coins, basically the reason you would do that, like I've already explained, is you would find a small cap coin, invest a little bit of money, but in 7 years' time, that's going to turn out maybe to be the next Bitcoin or the next Ethereum. You never know. So how do you choose a small cap coin? That's what my next video is going to be about. Please don't miss it, and please subscribe to the channel. Tell all your friends. Okay, folks, so that brings us to the end of this video. I hope you have got enough of information on how to construct your first portfolio. If you already have a portfolio, tell me what's in it. Tell me what you're sweet on. Let me know in the comments. Show me some love. Until next time. Okay, bye.